Good afternoon, everyone. Hope everybody's well. Today is November 30th. It's about 2:30 Pacific time, Thursday, end of the month. Hope everybody's having a good week. It's been a very interesting week overall. NASDAQ today ended up lower about 30 points, 0.2%, unlike the S&P 500 and the Dow, which went higher. As I mentioned in the last 3-4 days, I've been mentioning it to you consistently. The Dow Jones is the strongest of the three indices, and I've told you, and I've mentioned that on Monday, Tuesday, and Wednesday as well. So this is expected to move a little bit. I think there's a little bit of rotation going on, money moving from the big magnificent seven, kind of Apple, Microsoft, Google, Amazon kind of companies to some of the other stocks. So I just wanted to point that out. And there's also a lot of, or not a lot of, some movement into the small cap. So watch that closely as the movement of the money seems to be shifting towards mid cap, small cap stocks, 2 billion and above, and away from the magnificent seven. So they're not going up as much as quickly. That's one thing to keep in mind. So rotation is good. Just keep that in mind. Nasdaq was down about, as I said, 30 points today. The S&P 500, on the other hand, actually went up roughly about 17 points, 0.3%, almost 0.4%. Good move. Now it starts to be forming a new channel. This is an inside day, a little bit more than an inside day, actually. So good move, good strong move towards the up. Don't think it's going to continue for much longer, but it's just consolidating after a strong bunch of weeks of just moving up and to the right. It's taking a little bit of a sideways pattern. Look at this, strong move up, a little bit of sideways, either goes up or goes down. We've got to wait for that. Don't anticipate it going down, but I'm going to be prepared for both. And then finally, the Dow Jones Industrial Average of the three was the strongest, up nearly about 500 points on the day, 520 points on the day, 1.47%. Very strong move. As I mentioned, the pattern over here, the loudspeaker pattern, just moved it and carved it all the way up to the top. This is a very strong move, very strong channel. Good strong uptrend, has broken through a bunch of different resistances. And look at the channel. It's actually moved out of the channel. This was a key resistance point for the Dow Jones Industrial Average, which was the 35,692, and now it goes all the way to 35,950. If you go back to the weekly chart, just to give you context where this is going to end up, the next big stop seems to be in the 36,541 range. So move this away from the bottom resistance, obviously, over across to the top. This should be somewhere around the next resistance zone that it's going to shoot towards. Still a little ways away from there. It's going to make its move up a little bit higher. So I'm not too concerned, but this is another strong move. Still expecting it to move a little bit higher and take a little bit of a break maybe, but right now this is where it's heading to. So I'm going to even remove this resistance to a certain extent, these two resistances, and it may move a little bit lower, come back to this time frame, but it's definitely heading towards the 36,750 time frame, 750 number. Okay, one of the stocks that came up, everybody knows about it, but very strong move, year of efficiency, company number 2. This was Salesforce. And Salesforce essentially started out today with a nearly 10% move up, very strong move up, absolutely strong move up. Let's look at the 5-step process, see why and what it is doing, and see if this is worth our time. We start always with the fundamentals. I start with the financial statements, income statements first on an annualized basis, roughly about $3.4 billion in revenue, growing at 25%, and nearly 4 times again, beautiful growth. Look at that, 25, consistently growing at 20, 30%, but slowed down dramatically to 18% from 20%. So this was a move down in 2022. So this was what probably some of the activist investors, especially in S&P, were complaining about. This used to grow very, very well. And look at this. What used to be a strong, consistent net income just cratered in 2022. Look, it went from 4 billion to 1 billion. They spent a lot of money during COVID, hiring a lot of people, and probably a lot of inefficiencies because of the acquisitions as well. And that's just cratered in terms of net income. So this was not a good sign. But still, 4 times growth, very strong, nearly 70-80% margin, gross margin. So that's a good thing. Let's look at it from a quarterly basis. Going from 7 billion, now finally moving into, I wouldn't still call it a growth level. It's at least stabilizing in the 11% growth range, from 21%, 14% to 11%. So this seems to be at least stable growth. It's still not a great sign. You want to get to the teens. In this kind of 8 billion, 35 billion range on an annualized basis, you want to be at teens growth at least. But this is the big story. Look at that. Now it's going back into the 1.2 billion, 1.3 billion a quarter net income. That is the big reason why CRM is up nearly about 100% to the year. Year to date, up about 100%, not exactly 100%, 133 to 251, 126 to 251. Look at that. That's 100% growth for the 52-week range. Very strong move up. So I like the fundamentals, at least from an income standpoint. Let's look at the balance sheet. Roughly about 92 billion in assets. Most of it is current. No, most of it is non-current assets, and a ton of it in intangible. This is not a good sign. Still, they have enough cash, and they have about 13 billion in debt. So if you look at how much they have in cash, current assets about 19 billion, and long-term investments about another 4 billion. I'm not sure about the property, plant, and equipment being useful in the short term, which is a software company, but still enough cash to be able to survive and manage and grow from here. If you look at the valuations, 80. Okay, so this is a high, so it's gone down dramatically. Look at that, 800 time PE ratio, 800 PE down to about 80. This is still high for a company growing in the teens at 35 billion. To give you some comparables, look at Adobe. This is a comparable company, software as a service company. They're in the marketing space as well. So similar kinds of valuations should be expected, but Adobe is growing a little bit faster overall. So I think that's one of the reasons why Adobe is probably going to get, and they're probably going to get a little bit of a better valuation overall. Look at this. This is 15 times, 55 times to 38 times. Adobe is 55 times and 15 times PS. Look at CRM. So this was 55, 15, and this is 38 and roughly a little bit lower in the 9 times. So I think CRM overall, from fundamentals perspective, is looking very strong. I like it from a growth perspective. I think one of the key things it has to do is to prove that it can get back to the teen growth as opposed to the 11% growth revenue year over year. Okay, long term from a chart perspective, did a very strong base, consistent mover up and to the right. Took a little bit of a dip in the 2020 timeframe. That was probably because of COVID down, and then just a strong move up during COVID. Found a nice stage 2 move, stage 4 decline, consolidation stage 1, stage 1 move all the way to November 21, and then a stage 4 decline. This is 124 is probably one of its lowest point, somewhere in the 23 of January, December 24 timeframe. Since then, it's moved up to stage 1 and then consolidated a little bit and was chopping and churning in the 205 timeframe. And this is a strong move in the month. If you look at it, this is a very strong candle from the 203 to 245 in 1 month, roughly about 20-25% move is a very strong move. So long term, it's just going up. This is a very beautiful candle. I really like this candle. So this moves, this signals it's going to move a little bit higher. So where is it in the long term? After consolidation, stage 1, it's beginning to move up again. So here is one of the resistances I would draw, but probably a little bit closer down in this range, 271, 275 range is one of the resistances, and the support in the short term should definitely be in the 199, 200 range if it comes to that, if there is a little bit of a downturn in the market. Let's go to the weekly chart, see what patterns we can get. Okay, so this is the left, this is the right, this is the head, this is the left, head, shoulder. So head and shoulders pattern moved all the way down, and then this is a nice series 1, stage 1. This is a stage 2, all the way from this time frame, May through October, even all the way up until November. It's actually been just consolidating, and this strong move indicates it's ready to move up into the right. So I don't see any major hassles. This is look at this, just to give you a context of what a head and shoulders pattern looks like. This is what that looks like. So this is the head. Then look at this is the left shoulder. And this is the right shoulder. And off it goes to the bottom, consolidates in this area, somewhere around this 199, 194, but really a little bit more, consolidates, does a little bit of a down. And then since then, on the weekly chart, you can see it's up and to the right. This is a good, strong channel move. So it's up and to the right on the weekly, looks bullish on the monthly as well. Let's go to the daily chart. So you know that it formed an up and head and shoulders pattern, moved all the way up, broke through all these resistances. So the next big stop for it, if you look at it on the weekly chart, is just going to be all the way up into the 270 range. There may be some resistance for it right now, even here in the 257 range just for it to be able to get through. There's a little bit of a resistance here, but I think 270 is a very likely target. I would probably be, so 270 is roughly about 10% from here. But just looking at the daily chart, one of the things that struck out to me, all of the moving averages pointing in the right direction. This is a little bit flat. 200-day moving average is a little bit flat. I wanted a little bit higher, so I think that might move a little bit, give it a little bit of time. But this is a little bit of a yellow flag for me. The RSI is really stretched towards the up on the 85 zone. Look at that. And whenever that happens, it usually takes a break. It's never been this high, but probably because of the gap up. So I wouldn't expect it to, this is a strong move gap up after earnings, but it doesn't look like a power earnings gap candle. This looks like a candle where they were trying to push it up, but didn't make a strong move overall. I like the move. It is a 10% gap up, but still, look at this. The candle is not great. I would expect it to consolidate a little bit given its RSI to catch up. So usually when the RSI hits even 79, this is higher than 79. This is 85. So I would expect a little bit of a pullback over the next few days, weeks. Don't expect it immediately. This could just keep going and going for some time. That doesn't mean, but it gives me a pause as to when I should enter. I would much rather enter in the 240, 230 zone. So this is not going to be a slam dunk setup and trade. So I'm going to wait for a little bit on this one in terms of buying, but this is definitely heading to the 271 range. Wouldn't mind taking a small position somewhere in the 240, 250 range, get to 270, give it up. That's roughly about a 20-point gain on a 250 stock. So a little less than 10%, but it's going to move there in the next couple of weeks, 4 weeks or so. And given the very nice Santa Claus rally that maybe people are expecting by the end of the year, this should do well. Thank you very much for subscribing. Please share on Twitter. Let other people know about the videos if you like it. If you don't like it, also let me know. Thank you very much. Talk to you guys.